Hello and welcome. Today we're going to take a look at what the prospects are for the US economy in 2020, an election year in the US, and against the backdrop of quite acute uncertainty over the economic prospects in 2019. It has to be said, in recent days there has been more enthusiasm around the US economy, and we're going to just take a look on what sits beneath the hood of that. Well, of course, this year the US economy has seen significant stimulus from the Federal Reserve that has powered asset prices. We're seeing equity markets very near to their all-time highs, and that has really been providing the level of stimulus to offset a slowing economy for two reasons. The first, which is well understood, is the trade war between the US and China, but increasingly looking at the European Union and other third countries as trying to rebalance US trade. That has slowed the US economy, and the Federal Reserve has had to act to respond against that. But the second reason why stimulus has been introduced into the US economy is relatively low inflation, certainly below the 2% target that the Federal Reserve are mandated to achieve. And therefore it's provided Jay Powell and the rest of the FOMC with the wriggle room to be more accommodative, to be more stimulative. And while there's been pressure on the White House to go further in terms of cuts to interest rates and the restarting of quantitative easing, actually this has provided markets with a level of enthusiasm that has driven up asset prices and has provided a floor under US output. Now, heading into 2020, we've seen in recent days an entente cordiale emerge between the US and China, a phase one trade deal that provides some enthusiasm that the ramp up in tariffs that had hampered growth in 2019 will not be as material in re-election year, and that the president actually wants the US economy to be running quite hot into his re-election or his re-election campaign, which really kicks off in earnest in February 2020 with the first Democratic primaries. What you also see in the US economy is significant fiscal stimulus. The Jobs and Tax Act, the movement to try and provide more fiscal stimulus into US householders and US businesses' pockets means a fiscal deficit of something like 5% of GDP forecast for the next decade. Now, that is a significant fiscal stimulative backdrop that has provided another leg to growth. But of course, that has still only achieved US growth of around 2% this year, and the White House certainly would like something closer to 3%. And the question is, how much of the stimulus that has been delivered by fiscal and monetary levers will pass through into 2020 and deliver that kind of level of growth? Well, certainly the prospects near term are that it will, and I expect US economic growth to pick up from this point, certainly in the first half, maybe the first three quarters of 2020. My concerns are that we're seeing across the world the half-life of policy stimulus, both monetary and fiscal policy, is shrinking, and therefore the prospects for 2020, from my perspective, are much more cautious.